Hello, this is Professor Randy Menton of Thomas University, and this is the second video of the two videos over Chapter 8. And the concern with this video is how we calculate the allowance for uncollectible accounts if we use the balance sheet approach. Now, the previous video was over the income statement approach. This video concerns itself with the balance sheet. And what's on the balance sheet? Well, assets, liabilities, and owner's equity. And the allowance for uncollectible accounts is a contra-asset. So that's going to be our concern. Remember, in the last video, the income statement approach, we were concerned about this guy right here, the uncollectible accounts expense. Once we calculated that, we were essentially done. All we had to do then was to add it or subtract it to the beginning balance, but that number stayed the same no matter what, and the allowance for doubtful accounts fluctuated up and down depending upon whether or not you had a debit or a credit balance in the account to start with. Well, under the balance sheet method, what we're looking for is the balance sheet account. In this case, the allowance for uncollectible accounts. So whatever we calculate for that allowance, that's going to be the balance at the end. So our entry will have to fluctuate up and down. Remember, in the last video, the entry, whatever we calculated, stayed the same whether the balance in the allowance for uncollectible accounts was a debit or a credit. So you're going to see a change here, and it's really important because if you can't separate these two, you're going to have a very difficult time on the examination. So without further ado, let's begin. And I'm going to start by reading what what we're asked to do in this particular problem. And again, this is a problem that I created, so you can't find this in your book. But I'm going to start right here where it says the accounting department estimates that losses in the aged accounts will be seen in the percentages noted below. That's these guys right here. And the aged balance is in this column right here. And we're going to start with the current. That is, anything that's current is not past due. Anything that's 1 to 30 days past due, 31 to 60 days past due, 61 to 90 days past due, and so forth, all the way up to a past due greater than 120 days. And it should make sense to you that the longer these things are outstanding, the greater the projected loss would be. And so this column simply reflects the dollarized losses that you would get by multiplying this column, the aged balance column, times the projected loss. And that's the way that you would go through and actually do these. Now, you might do all sorts of statistics to kind of come up with what these numbers here should be, but that's a little bit beyond the purview of this particular problem. So I've provided already for you the aged balance, the projected loss percentages, and the dollarized losses for you to work with, and it'll also keep the overhead of this video down. So what is the balance in the allowance for uncollectible accounts if A, the beginning balance is a credit of $25,000, or B, the beginning balance is a debit of $15,000? Notice that I left those two numbers static between these two videos. What entry or entries are to be made? So those are the requirements. Let's go back and read the actual problem itself. Marvelous Mayhem Machine Company, 3MC, builds robotic machines that have no function other than to create chaos. For example, its robots go through your sock drawer and mismatch all your socks, or put bleach in your colors and wash them in hot water, or inexplicably decide to parallel park your car on the interstate. So as you can see, these robots are pretty much gender neutral. 3MC sells its robots on credit with 30-day terms, and over the last 5 years, starting in 2011, 3MC has had the following experiences for sales and actual losses. And then it goes into what it wants you to do again. All right, so we've already made this calculation here, okay? So let's go down to the first scenario and see what would happen. if we began with a credit balance of $25,000. So I'm just going to put that number in and hit enter. And what you notice now is that I have an uncollectible accounts expense and an allowance for doubtful or uncollectible accounts that's been calculated based upon what this number here has to be. So notice it's exactly the same as this number here. Now in your previous example, your previous video, it was exactly the same. This number here, that is, was exactly the same as the number that was calculated up here based upon the sales volume. Here's the number that we calculated, which says that this number should be on your balance sheet at this particular point in time. So we don't care what the starting balance was. It doesn't make any difference to us. We're simply going to add or subtract to make it come out to the balance that we calculated up here. Again, this is the balance sheet approach. This is the uncollectible accounts allowance, and we have to, for that reason, we have to make it come out to that number. And you're going to see in just a second that this doesn't change, but the entry itself will change. And that's why I have actually here two possibilities for entries, whereas in the first video on the income statement approach, I only had a single uncollectible accounts expense and allowance for uncollectible accounts entry because it didn't change. Now, in the second entry, or the second example here, scenario B, it says that we started out with a $15,000 debit balance. So, if I type in my $15,000 and hit enter, I get something of $15,000. Whoops, you know what? I have to go back. That was not what I was supposed to do. Shoot. Gosh, I'm sorry, guys. Actually, the beginning balance belongs down here. So I just put it in the wrong spot. So now you'll notice that when I put the $15,000 on the debit side of the account, here is what I need you to see. The $307,000, which was calculated up here as what needed to be in the balance for uncollectible accounts, that's a balance sheet side, okay, is the same number here and here. But the entry itself fluctuates. Look at the first entry. If we had a $25,000 credit, what we now have is an entry required of $282,000, which is what's needed to move this $25,000 credit to this $307,000 credit. That's $282,000. Add the two together because we add likes and subtract unlikes to get to this number right here. Now, how did the actual calculation appear? Well, it was simple. Because it's on the credit side and this is a credit account, I started with this number, subtracted this number, so that I could get to a number that I could add to this number to come up with this balance. Okay? Now, in the second example down here, since we add likes and subtract unlikes, what I had to do to come up with this $322,000 entry, that I had to actually add to this number. So to this number, I added this number to get to this number. Why? Because I have to come out to this number. So if I add likes and subtract unlikes, when I'm working from an unknown position, what I have to do is do just the opposite. Okay? So when I do just the opposite to make this number come out, I had to add it. I had to add the unlikes and to get to this number, and subtract, in this case I had to subtract the likes and add the unlikes. Now, you know, that's only to get to your number, because now when you actually make the calculation, since you add likes and subtract unlikes, here's your credit side, here's your debit side. Notice that the difference between these two is the actual balance in the allowance for uncollectible accounts. So to summarize very quickly, under the balance sheet method, whatever I calculate for the allowance for uncollectible accounts, and that's what I'm doing here, I'm calculating the balance in the uncollectible accounts. that's the number that I have to see in the balance. So whatever it takes to get to this number, whether that's to add something or to subtract something, I have to do that, but I have to always come back to this number. Okay? Now, in the previous example for the income statement, what I was looking at was a calculation based upon a percentage of sales, okay, which is an income statement item, and that gave me the entry itself. So if you go back to that video, you'll see that whatever I calculated for the entry was the same in both cases, and this number here fluctuated. Okay? In the balance sheet approach, this number does not fluctuate. It has to be the same each time, again, because this is the balance sheet account. This allowance for uncollectible accounts, that's the balance sheet account. We weren't concerned about it in the previous video. Okay, thank you very much. As always, if you have any questions, please give me a call, and I'll be glad to handle them for you. Thanks for your attention.